Good afternoon. Just a little recap for the day. As we saw the pattern of that rising wedge kind of yielded. As soon as it broke the bottom, I think that was pretty much it. The fight between buyers and sellers is still happening, obviously, because it hit quite a low level that it's possible that we chop for a little bit by the time people realize that the market is not as solid as they thought. So that being said, there is a mention that I did on it was a 50% retracement that I did. I mentioned that earlier because I do believe most times, more often than not, a 50% retracement will happen. And if you look at in Q, if you look at the percentage it did, it was exactly there about a 50% off the original drop. And then if you do the same thing here, it's about the same, right? It always kind of comes back 50% and then it continues a trend and then comes back 50%, continues the trend. It's more of it's a pretty good indication that the price is in a mean reversion status. And then that's how you play your mean reversion at 50% so that you know where to sell and you know where to buy. So our target was pretty spot on. It said 24,750, and I mean 24,800 from the bottom. Whenever I sent the first one, I said 24,815, and we're literally at 24,815. Ultimately, all of this is leading to an overnight pump, and then you know comes back from the earnings and intraday. I think something happened intraday. Powell spoke, and basically it gave some confidence to the market. Other than that, we're still in the same range block. We're still kind of hovering in the golden zone of the fib, and ultimately we need to be able to close above the gamma, which is coincidentally where 20 trauma is, which is your bull bear sign of trend, continuation trend. So yeah, ultimately this is gonna either break once it tightens somewhere, and then it'll break lower. Now we did hit the lower expected weekly implied move. I would maybe think we can go here, but we'll need at least a higher high. Definitely need something like that's gonna hit that trend line here. And for the time being, to me, looks like a nice bear flag. Like if the price action keeps in this range, it's gonna cause a bear flag, and then at some point in the coming week, it's just gonna drop and go sweep some liquidity. That's what I think is gonna happen more than anything. It's too primed up for it not to do that, because ultimately the pattern itself still has some downside. I mean, on the daily, it's literally in targets of 19,000. 20,000. So we still have all that liquidity to sweep these two equal low to sweep. We have plenty of spots to sweep if everything goes to shit. So a nice gap here that could be data, earnings, something that's gonna bust the price and ultimately go sweep all that trapped liquidity here. I don't think we're gonna go any higher anytime soon. To me, it's more of it's trying, but it's not. It keeps failing, and I think unless we're going above gamma, there's no point in sending longs. So for the time being, we're likely to have. We need this zone to be captured. That's what we need. We need a clear close above the gamma to give the hedgers a reason to long. For now, it's more ran by news. I mean, a lot of the stuff in the morning was AMD, and it just had to fetch a low. So for now, we're going to keep looking at it and wait for the outcome. Same thing for gold, right? Gold's been just on a fucking rampage and ultimately leaving a lot of liquidity in the low side, but it doesn't care because it keeps forming these higher lows. So gold could go really, really high, like 5,000, maybe 6,000. I think ultimately, if you buy at any pullback, you're in pretty good shape. That would be one way to think about it. Silver is at support. Looks very good. Looks like it fetched enough. There was a lot of buyers down there. It wanted higher, and it did. I think it's going to continue higher. So silver's to watch. Other than that, I'm not really watching any other stocks. I'm using a specific system that gives me a specific order code on a stock. Also, what I wanted to send is this. So this, the last time it crossed, right? Every time the volume that comes in, the implied volatility rises. Once it crosses, you can see these little dip happening, and then a major dip from the point of volatility crossing. So if this comes back down, we could have a small rally, but really leading to a bigger squeeze to the short side. So to keep in mind, we've already done one. The last time it did, it failed to create a higher high and it just melted into way more volatility. So if that remains above, it'll likely to have more volatility coming in, especially if we break the 30. And see, last time it crossed here for a short period of time, we had some volatility. So it is crossing as we speak. So it needs to get out of there, or we're going to be looking for a lot more. I don't expect it to be this, but who knows? Maybe this, somewhere thereabout. I think ultimately there's a lot of volatility that's coming. Okay, so for the IOSI is basically an order that comes in and you look at the type If it's a put, you go call. If it's a call, you go puts. It is just like a naked call or a covered put. Someone is putting a bid that the market will trigger they're basically selling the contract, and then someone purchases it. It's a trap. So ultimately, we've been using that method, and I hate to say, but it's been 100% so far. Nothing is really 100% in the market, but ultimately this has been giving 100% return every time. So far in the span of, I've pretty much been doing that for about 2 weeks now, and it's been pretty accurate. So we've been using that a lot in the channel, and so far it's been doing this thing. I mean, if you look at, this was at 9:30, right? All three was at 9:30 Eastern Standard Time, so that means 8:30 my for my area, and that's when we had the dip. I mean, it literally lost 3 points in that time, that span of time. Now, obviously, once it reached support, you just close the order by common sense and default, but you still caught 1, 2, 3 points, which is on a in the money call or in the money puts or in the money call. 1 point equal to 100%. So as zero DTE. So I mean that was a 300% order right there if you caught right at the open. And then I do believe there was a call. Yeah. Oh yeah, 9:55. So those puts were triggered at support, right? So you caught 3 points if you did short right off the bat. And then once those ISOI happened, right at support, you knew you'd go long and basically catch like if you were support to previous swing high. I mean, that's a 2% at 12 points. You would have literally made a 1200%. So it's like within 12 o'clock, right? So they're pretty accurate. So puts to call to puts. So the first two were calls. Yeah, the first one at, let's see. I remember the first one was puts, so we weren't call, and then the next ones were calls. A 9:55, so basically around here for that small, like 2 points. At least the one that I sent. Ultimately, it's a very good method to be able to act as a correlation for your bias. But so far, we have a double top. We need to get out of this range. I think we might just go back to the lower weekly on Qs. We can't seem to break out of the upper weekly bound, and I think this is going to be an area where we're going to go. It looks like an area where we would go. So yeah, for now, we're going to keep our eyes peeled on the market and just wait for confirmation of failure of highs. I mean, even then, you could put your limit short at 50 trauma, and then your stops at the highs and just basically send it short. If you're wrong, then it'll it'll create a higher high, which means it's gonna keep going. If not, then it's downfall. I think we have more left on the tank. So yeah, that's all I have for now, and I hope everybody is profitable and come see us.